Hey, what's going on, guys? Welcome back to Kiwoon Learning, and this is Stock Picks. And today, we'll be going over Vanguard's Total Stock Market Index Fund ETF. And this is essentially just like a conglomerate of nearly 4,000 stocks that I believe will outperform the market in years to come. And here's why. So as of right now, there's SPY, right, which is roughly 500 stocks. And basically, I'll be comparing the difference between why I think VTI will prove to be outperforming than SPY. And so to even begin, what ETFs really are is essentially just investment portfolios, and they're basically structured by investment professionals, right? So they do all the investing for you, and all you have to do is just buy their overall ETF. And so one of the biggest things between SPY and VTI is just their overall segments that they really like look at. So for SPY, they really only cover like the US large cap, while VTI on the other hand cover like all around the large, middle cap, and small cap, even though the majority is still in large cap. And so, as I was saying before, one of the biggest things with diversity is that VTI, they almost are 4,000 holdings, while SPY just about 500. And so, I think this diversification within this middle cap and small cap is what's going to prove VTI to be extremely good, especially in the long term. And with the market being slightly overvalued, as what I think right now, that I think these 4,000 stocks will also prove that the diversification will also lead to, not correcting as much on like a strong downside. But even though they will have some relatively good bull runs with those middle and small cap stocks. And so getting into it, what an expense ratio even means. And so as we can see here, VTI has an expense ratio of 0.03%, while SPY has an expense ratio of 0.0945. This basically just means every $1,000 you spend on VTI, you need to basically give VTI, the entire like investment brokerage or investments, about $3 every year just to be paying for or to be able to be part of VTI. SPY, on the other hand, is 0.0945%, which is essentially $9.45, but it's also over three times the expense ratio that VTI is. And the reason why this is important is because with compound interest, you really want to be getting the most amount of money that you can possibly in terms of overall percentages. And so VTI, as I was saying before, their top 10 holdings a lot more diverse with only 23.6% of their overall ETF. While SPY, on the other hand, it's 28%, almost 5% more. And so getting into like what their actual, subsidies really look like, large cap with VTI 72%, 19, 6.21. So still focusing mostly large cap, but they have a lot more exposure to like the middle cap and small cap stocks. So as I was saying before, if we have like some of those stocks with, Tesla, back when it was, trading for the $50, $60, it was actually part of VTI and we'll probably start running with it. And a lot of SPY doesn't even get, a part of these like small cap or even micro cap stocks that have high potential here. And so Vanguard actually has, multiple parts of like their overall S&P 500 like total market ETFs, but their main two are VU and VTI. And so the reason why I think VTI will actually outperform VU is because VU is very similar to SPY, right? Because VU, it compromises around, mostly of large cap stocks and roughly 500. But the thing is, VU does have like an expense ratio of 0.03%, same as VTI. So I would suggest if you guys are in SPY right now, if you guys are getting to the year for the tax bracket, maybe don't take out. But I do think VU will probably still outperform SPY. But the reason why I think VTI will outperform VU is because the fact of, as I was saying before, as many holdings as they do have, I think there is a lot more upside in those middle cap, small cap stocks than there are those large cap stocks right now, just because of the 10-year high treasury rates and inflation as high as it is. I think those middle cap stocks and the small cap stocks will be able to outperform the market than those Apples, the Googles. And as we can see here, VU actually these are their 510 holdings right now. And as I was stating before, their largest holdings with like Google over here, we got Alphabet, this is another part of Google, S&P Global, and we got Charter. Just a lot of like the really big companies that really make up what VU really is trading for. And I think that these companies, again, as I was saying, are just a little bit too slightly overvalued to the point where I think VTI will outperform. And so another thing is that VTI in the past 21 years or so since they've like been incepted was that they've been roughly averaging like 14.7% in the last 10 years. Again, I know we've had like a crazy last year, but let's say we even have trailing returns of like, let's say 10% every year. And just for you guys know, like this is completely free to use and it's just like on investor.com. This is essentially just a compound interest calculator. I just want to show you guys like what this compound interest really does. And so let's say you only invest $100 every month. Maybe you guys have the opportunity to do so, maybe you don't. But I'm just talking about for like the future over long periods of time, what this like interest rates and this like, compound interest really does. And so over the course of 40 years, let's say you put up $100 every single month and you want to do 10% every year. And as we've seen in the last 10 years, 14.7%, again, extremely high. But let's say conservatively 10%, right? And you're paying that 0.03% expense ratio and, you compound it annually. You calculate that, that's roughly $500,000. And that's only with an investment of $48,000. That's a lot less significant than, total, future value of 10% compounded at $531,000. And so what I'm just showing you guys here is that compound interest is extremely important in that if you guys are really trying to save for your future, I think VTI will be extremely useful tool in, just putting money away, not really having to worry about it and just letting it grow. So you guys have like that safety fund or just like, retirement fund for you guys. And so getting into just like, a good place to enter on VTI. So even these ETFs can be traded like on a technical like term or technical level. So I do think VTI still is trading pretty high right now. I would wait for VTI to get back down to like, that low 230s or even like into those 220s. Just because like the 242 that's trading at, even in the short term, is trading a little bit high. And then for the long term, I think that buying VTI, anything under like 210 for the long term, I think will give you that 10%, returns that you guys are looking for. But yeah, that's basically all I have today, guys. I know this was a little bit different of a video because we went over a mutual fund or an ETF rather than a single stock. But I hope you guys really liked the video and leave any questions and comments down below. That's all I have for today, guys, and I hope you guys have a great rest of your day. Peace.